Hey guys, welcome back. So in this lecture, I'm going to be talking about multiple time frame analysis and how we can incorporate it into our trading examples, okay, and how we can use it in real trading. Because this is what separates the professionals from amateurs, okay. So let's go ahead and do that. Um, but first, the last trade that we entered here, we'll see here it reached the 75% level. So like we can take half of the profit here. Okay, let me do that. Let's sell 0.5. Okay, we can sell it, and you see we took profit there. It was one before, and now it's 0.5. Okay, so you should do this, guys. Like as you move forward, we're gonna be taking live trades so that you can also practice. All right. So let's see what the costly mistake that most of the traders make. What they make is like they look at the 5 minute chart and see an uptrend and go long and get crashed. Okay. So for instance, if I go here and if I only see 5 minute chart, okay, and I'll remove that now and also remove um, this one for now. Okay. So if they're only looking at the 5 minute chart, um, and they go long without any higher time frame context, then it's like not that high probability trade. Okay. Now the answer is um, it might be that like the reason behind they get crushed behind that trade is that it might be that daily time frame is in downtrend and they're trying to go long. Okay. So if I come here and put daily time frame, what we see is like daily time frame is in uptrend right now. Okay, we can see here this is up wave, this is down wave. Okay, so what I'll do is like I'll go ahead here and just put it like this. Okay, now here I'm gonna put 5 minute time frame, or you know what, I'll put daily time frame, let it be there, and here I'll put 5 minute time frame. All right, and what I'll do is like we'll do forward testing. Okay, so I'll do bar replay. All right, and you see here this was downtrending market, right? Because daily was in down wave. So I'll just stop right there. All right, and let's see what happens here. Okay, so we are looking at 5 minutes time frame. You see 5 and 1 day time frame. So let's see. Okay, yeah. To see, let me actually do this. So symbol is same, crosshair is same. Okay, so you can see as I put here. Okay, so as I just like let it run, you'll see here. Okay, so you see this candle. Now you see it's showing that like it's trying to go up. You see here, it shows that it tries to go up, but you see after it goes up, like it just snaps back. Okay, and that's where like downtrending market begins for this one. So when as soon as the wave closes, we'll see um, that okay, now it's also downtrending. So the only trade that we look for is short trade. Okay, no long trade, no, right, only short trade. So when it retraces to 50%, we can short the market. Okay, that's the whole ball game here. All right, so we can see as it reaches there, if the wave closes, didn't closes down. So like, just like, and 75% we can wait, but see here it closes below. So you could have entered short there and like put stop loss, your stop loss there, take profit here. Okay. And you can see trade worked out really well. Now, now why I'm trying to tell you is that we have the context of higher time frame, daily time frame, you see. If you had entered long here, you could have stop loss hit, right? So that's what we want to prevent. All right. So let's move on. Um, so let me show you how you never make this mistake again, which I already did, by the way. I want to go in much more detail. Okay. So the nested box concept is, we all know that the market are fractals. Okay. So what do I mean by that is that this, okay, the daily time frame is happening within weekly time frame. 1 hour time frame is happening within daily, and that is happening in weekly time frame. Meaning, um, what do I mean by that is that um, suppose this is the start of the week, okay? So, for instance, this is the start of the week, say Monday, right? Now, in this Monday, there will be like 7 day, 1, 2, 3, 4, 5, 6. So the 1, 2, 3, 4, 5, 6, 7. Okay. So each day is, so this is your whole week. So this is 1 week. Okay. Now in that 1 week, there are like 7 days. Okay. So day contains within the weekly, 1 hour, 1 minute contains within the daily, and that in turn is weekly. So what I'm trying to say is that like if you want to trade 5 minutes time frame, you should have context of higher time frame. Okay. And so this is what the nested box tells us, that okay, if we are in uptrend in weekly, okay, that's the very strong uptrend, and strong levels. Okay. So we only look for long trades on lower time frame, right? So so as I showed you in the example, as you have the context of higher time frame, you can find a really high probability trade. Okay. So the golden rule is that trade within the higher time frame trend. If the weekly is up or daily is up, if the weekly is up here, the daily pullbacks are buying opportunities. Okay. And if the weekly is down, the daily rallies are selling opportunities. So for instance, here, if you apply the weekly time frame, you know, you can see, I'll just disable that for now. You see, from this point onwards, right? From this point onwards, the we already knew that weekly was going down, you see, right? Weekly was going down. So the rallies here, the rallies here are selling opportunity. Okay. Short trade. The rallies here upside, that's your short opportunity. Okay. That's what it's telling us. All right. And this concept we can apply to how, to like any time frame basically, you know. Um, yeah. So let me just move on and show you. And we know from the box theory is that the lower time frame moves within higher time frame. So the lower time frame, uh, this is the Chinese nested box concept in action. Like we know this Matryoshka box, right? The Russian box as well, I think, yeah. Uh, so you have like box within box within box. That's the fractal market theory that we know. Okay, uh, fractal market. All right. So let's move on. Now the automatic solution that we have here is that these levels that you see, um, these levels that we draw, um, let me just enable that. You see these levels which I talked about, green, red, midpoint. This is calculating the highest high and lowest low from the start of the week. So we already have a context of higher time frame within for that particular week, And if you move on to the 1 hour time frame, then we have the highest high and lowest low for the whole month. So that contains the 4 weeks of data. Okay. So for instance, starting from this, like for instance, check this out, right? See this starting from this, and you can actually see this one. Okay. Um, you can actually see this line. You see, um, this one, just monitor here. That's showing the time frame. The same time frame. See, October 1, October 1. Okay. So we see that when the market reached this high, and that's a really high, from there it came down, and these were your like for 1 hour time frame, that's your monthly highest high and lowest low. For the October, see the start of October month, this was the highest high, this was the lowest low, and we traded like that. Then September began, then November began, and then again it tracking starts, right? So this incorporates our higher time frame in our analysis. The indicator automatically does that. Okay. So that's what I talked about. It automatically plots weekly HTF high, low, and midpoint. So we know, by default, we don't have to switch to different time frames. Okay, it automatically does that. But if you want a bigger, higher time frame context, for instance, if you want to apply the daily time frame context to 1 hour time frame, then you can create a separate chart, put daily time frame here, put 1 hour time frame here, and do the analysis. And our goal is to always see the bigger picture first. So, for instance, if I see this level, you see this is the level here, and from the daily context, like this is your selling point basically. Okay, if you see this one, check this out. Here, okay, I think it was around here. You see the midpoint as it was coming down already. This is what your selling point. This is what your selling point, right? So yeah. Um, so after this, it might sound multi-time frame that multi-time frame analysis is complicated, but with geometric trading system structure, it's automatic. Okay, and I have built it that way so that it's less confusing or less complicated. Okay. And most importantly, it's more probable. It gives high probability trades. Okay, so why multi-time frame analysis is mandatory? Why is that? So the conflict comes when we on the 5 minute chart, uptrend, higher highs, higher lows, he looks bullish, right? You might think that, but when you look at the daily time frame, as I showed you the example, STF, we are at the daily STF high, and that's a major resistance. So if I come here, you know and I can show you example live, because that's how I think best way to learn. And I'll come here, and the shortcut is just put 5 and just enter. You know, it will automatically switch there, and you can see we are at here. Okay, now I'll just press hit and just watch what happens when the market comes to this resistance. Okay, just observe what happens. See, it reaches the resistance. Now it's looking like it's going up. Okay, it's uptrending, but see what happens after that. Okay, see, big selling came, a lot of good volume, right? And now this we're gonna talk about later what it means, role reversal. But you can see this was very strong resistance on the higher time frame. Okay, on 5 minutes time frame, it looked like we are making higher high, higher low. We did, but if you have higher time frame context, you can be more. um, like careful, because see, if I just put here, you know, because it's in support level, right? Now, if you find out the trade, you know, it's making higher high, higher low. Yeah, you can take that trade for sure, like, you know, because um, the target is for daily time frame, the target is upside, you know, and it's gonna go up eventually because on the up wave daily time frame, it's gonna be going like making higher high and higher lows. So that's the analysis, and I'll just let it run. You just watch, you know, I'll just explain here, okay? So this is what I explained earlier, and you know, this is the reason why most of the traders get stopped out because they're trading against the higher time frame, and we don't need to do that. All right. So the HTF is your boss. Okay. The principle is no matter what your strategy is, you must know at all times what the trend is on multiple time frame. Okay. So as I showed you here, the example, right, when the market was here, what it's saying is that no matter what your strategy is, you must know at all times what the trend is on multiple time frames. Okay. In this case, daily time frame or 4 hour time frame. If I put it on like 4 hour time frame, you can see the context of the market as well. Okay. So the rule is the higher time frame is your boss, and you can trade against it occasionally, but you better have a good reason and a tight stop loss. Okay. Most of the time, trade with the higher time frame trends. All right. Now, STF selection guideline is that the rule of thumb is that your higher time frame should be about 4 to 6 times larger than your trading time frame. So as I'm using 5 minutes time frame here, 4 hour, 1 hour time frame is good for higher time frame perspective. And you know, like if you go here, like you can actually read about the um, hmm, you can actually read about this indicator. So I come here. All right. This is it. So I'll just go here, and here you can see this is the automatic time frame. So for 5 minutes, we have 3 day of highest high lowest low. For 15 minutes, 1 week highest high lowest low. For 1 hour, 1 month, you know, and 4 hour, 3 month quarterly. Daily is 12 months, sorry, yearly context. Okay, you can read about it, what how we are like, you know, what are those levels, as you can see here, and there is also some trade rules as well for you to go and look into it. All right. So yeah, um now you see, like in this upway on 4 hour as it was going up, if you had seen this, like, you know, this was a good trade to take here. Okay, now let's move on. This is what I was trying to tell you. Guidelines, 5 minutes, use 16-minute time frame or daily time frame. You can come here and put your 1 hour time frame, you know. It's just a guideline, and you can practice and see for yourself if it works or not, you know. But it's always a good idea to use higher time frame as your guideline. Okay. 15 minutes you can use daily or weekly, 60 minutes weekly or monthly. You know, I mean, I would say like daily, you know, because weekly I don't have feature for tracking the. Oh yeah, I mean, like we do have that, but yeah, you can apply daily time frame at max for 4 hour even, and for you know, 1 hour time frame. For daily you can use weekly. Yeah. So most of the time, the indicator automatically detects your higher time frame and plots those levels. So, for instance, if you're in 5 minutes, it will plot the three day highest high and lowest low, right? If you're in 15 minutes, it will plot the highest and lowest low of that week. Okay, the dynamic highest and lowest low. Okay, so trading with STF context is the weekly STF trend is up. So check that out, like if your weekly trend is up or not. So I'll just come here. I'll put 15 minutes. All right. So here, see from the start of the week, what we see, we track uh, if my midpoint is uptrending or not. Okay. If this is uptrending, then we can take trade on these levels. All right. So, and the trade is that when price pulls back to the weekly HTF midpoint, you see here, price bounces off the weekly midpoint. Target is your weekly high that we did today. So yeah, you see, and we took half of the profit there. So another half profit there, $677 there. So yeah, and the stop will be low of that swing low, okay, or below the midpoint low. So this trade works because we're aligned with the higher time frame. Okay, you see, I have executed this trade live, and this statement holds true. Okay, because we've seen that. All right. Now, trading against STF have some downside. So let's see those. The weekly STF trend is down, lower highs, lower lows on the weekly levels. The mistake that most traders make is that look on the 50-minute chart and we are in short-term trap trend, and some traders would go long here. So if I disable these, you know, and some trader would say, okay, like here, um, what would you say here? Okay, we are in downtrend, right? I mean, yeah. So like when I enable this chart, then we will be sure that okay, whether we are in downtrend or not. In this case, we are definitely in downtrend. So when it comes around here, 75%, 50%, we can take short trade. Okay. But if we are in uptrend, we can take short trade. Okay. If we are in downtrend, we can take long trade. Okay. That's the rule here. Okay. So don't fight the trend. Okay. Go with the trend. So think of this like you're driving on a local road, which is 15 minutes time frame, but you need to know where the highway is going, which is weekly chart. Okay. If the highway is going north, you want your local road to also go north. Okay. Because you want to align with the road, align with the direction. But if you're driving south on a local road while the highway goes north, you'll soon hit the dead end. Okay. So keep that in mind. Go with the trend. All right. So the smaller box, 15 minutes, is contained within the larger box, weekly time frame, and that's why we have the context of weekly time frame. All right. If you see this, like this whole session from here to here, that's your whole week. You see, this 7 day, see 7 day exactly, right? So we are tracking that highest high, lowest low for the whole week. All right. Practical trading workflow is first check HTF trend. Is it up, down, or ranging? And very fast way to do that is just check your purple line midpoint. Okay, is it uptrending or downtrending? Which I have instruction for here. Okay, you see. And after that, step two is trade accordingly. If STF is up, only take long trades. Wait for pullbacks to STF support level, and you can apply it to higher time frame as well. Okay. If HTF is down, only take short trades, wait for rallies to HTF resistance levels. Okay. And if HTF is ranging, wait for the breakout before taking directional trades. What do I mean by that is you have 15 minutes time frame here. Suppose I have daily time frame here. Okay. I'll just quickly disable that. I have 15 minutes time frame here. So what we are looking for is the context of higher time frame. Okay. If my higher time frame is trending down. So for instance, if I come here, all right, I already know that okay, we have hit the resistance point. So after this point, whatever trade I take, I will only take short trade. So that's my directional bias. Okay. And as you can see, this purple line is also trending down. So that's a double confirmation. All right. So first check HTF, then look for entries on your trading time. All right. A complete example, aligned trade. I've shown you a couple of trades, but let's go through another one. Okay. Check out if weekly or daily trend is up or not. And I'm on 15 minutes chart, right? So price pulls back to the weekly lower HTF midpoint, which is 25%. So as I come here, let me just those. And you can see this example is talking about this one here. I think you just see those marker, okay? Because here I want to get the example here, but yeah, I think yeah, this is good. So see here, okay? You see market came down to 25% level, and if you see here, this is a strong support level, okay? 25% level. So this 25% level on daily time frame, this 25% level on daily time frame, and if you see, the market was in like this up move, up wave, and like it was basically going sideways, basically stopping volume. So and the weekly, this one is up trending, right? You see midpoint. So this is a good long trade to take. Okay, so we can see here. So why this is a high probability trade? Daily trend is up here. You see, it's making high, 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 low, high, high, low. Okay, and we are at key support level, which is 25% level in both of them. So 15-minute is showing bullish signal. All right. Price bounces, move through the weekly midpoint, reaches the weekly upper midpoint. You see, that's the textbook trade aligned with the higher time frame. All right. So key takeaways from this lecture is, and if you see like this might very well go along upside. Okay, you see, went up. So like from here you could have taken 6-7% profit. All right, key takeaways: nested box concept, which is each time frame is a box within a larger box. HTF is your boss. We know that trade with the higher time frame trend and not against it. And automatic HTF detection, which is already built into geometric trading system structure. You can read through about it here, okay? And HTF selection, your HTF should be 4 to 6 times larger than your trading time frame. So multi-time frame analysis is mandatory. The geometric system makes it automatic. All right, which I have shown you. Okay, and you should also practice just hit replay. Click anywhere and just watch chart play. Your brain automatically will adapt to structure how it's behaving when it comes to certain point, and as these points are same for all the time frame, you have much more advantage in understanding the concept. As you can see, it hits this mid 25% level, right? So that's a very strong support level. Okay, now if I hit play, you can see when it comes around here, that's your long traders. It's like made swing high, so you can take long trade here and be more confident about your trade. Okay, and we're going to talk about volume later on, but you see this in daily time frame, this big volume. Okay, we'll talk more about that later on. And we haven't even applied the trend line yet. Trend line is the biggest um, in high probability trade signal. Okay, it will give us. All right. So yeah, we were going to talk about it later on, but you see, it's making higher, higher, higher lows within this context. See as this up wave form, so it will go up, right? Now let's move on. So in the next lecture, we're going to talk about support and resistance from structure. This support resistance we're going to talk about in more detail. How basically the price action, how price behaves when it comes around these levels. Okay, support and resistance. Uh, so I'll teach you how to identify the most important levels mathematically. No guessing, no subjective drawing, just precise calculations. And this is where structure becomes actionable. Okay. And we're gonna apply price action to understand that. All right. So trade with the boss, which is your higher time frame. And I wish you happy trading. And yeah, so I'll see you in the next video. Thank you.